All righty. Good morning, everybody. Just getting my goodies on over here. Happy hump day. Made it to the middle of the week already. So hope everybody's doing well. Let me know, guys, if you are in any specific trades or if you're looking at any specific charts or you're curious about this war madness overseas in the Middle East. There's a lot happening over there. It's insane. So good morning, Thato. Good morning. Hello to you as well. I have a 1 hour show today because 30 minutes after the show ends, I have my interview, guys. So I'll be, I know I mentioned it a time or two, but it'll be for a financial analyst / content creator role with a company. So hopefully more details to follow. After that, they already are aware that I do my show and I do my shorts. I've got my own channel and they're okay with that. So there's no conflicts of interest there to worry about, which is awesome. I'll be able to do as I please. So, but yeah, I basically told them they could have the rest of my day. I mean, I set my trade alerts in the mornings. I let them do their thing. Whenever the trade alerts go off, it takes me a few seconds to decide if I want to buy or sell that asset, right? So it's as simple as that. But anyway, I've got that. Otherwise, I would do my normal hour and a half. But today I'm just going to do 1 hour just so I can have that 30 minutes to prep. I've already prepped most of the way. So just got a couple last minute things I want to do. And then I will, and then we'll see how I perform, guys. So with that being said, let's get into the charts. I'll get my stuff shared here real quick. And I am in a trade, by the way. I'm in a euro pound long position right now. So we'll dig into that a little bit and give you an idea of my thought process behind it. As far as today goes, we've got our ADP specific non-farm payroll coming out. Okay, now this is not to be confused with the main one, and I do believe the main one is on Friday. Let me double check that so I make sure I got correct info. Yes, non-farm employment change on Friday, 7:30 a.m. Central Standard Time. So that's right when, or I'm sorry, that's an hour before the New York session opens. Okay, that's Friday. But as far as today goes, today is the ADP specific. So ADP, of course, is the largest. I believe it's the largest human resources software here in the States anyway. I can't speak on behalf of other countries, but here in the States, ADP is the largest software, obviously tracking employment, hirings, firings, all that fun stuff, reviews, performance reviews for companies and their employees. So that's a very good gauge, as it is obviously our largest, again, human resources software. So looks like that report comes out at 7:15. So here in about 45 minutes. Previous number was 22,000 jobs added. They are expecting to double that, 50,000. So, hopefully we can get a number at that or slightly above. That would be nice for the U.S. market here. But yeah, that'll be 7:15. And then a little bit later on, we've got the Services Purchasing Manager Index coming out for the States here as well, where they are projected to drop by 0.3. But the good thing with the PMI numbers is we are still in a very healthy expansion range, guys. That's really good. Okay. Anything over 50 that you see here, anything over 50 is expansionary. Anything under 50 is contractionary. So we're well in the expansionary range, which is a good sign. And then what else we got on here? Crude inventories coming out for any of you oil traders. Obviously, oil has been crazy with the onslaught of all the missiles being tossed around from country to country over there in the Middle East. I think I can't speak. Brent crude ended up going over $80 a barrel yesterday, and I think they closed around 81 or something like that. With the U.S. oil just slightly below 80, but with big spikes nevertheless. We'll look at the oil chart here in a second as well. But yeah, that's definitely the wild card, guys, of all these assets traded. It's just very unpredictable. It's a very volatile asset, especially when war is in the picture or any black swan type events, geopolitical events, guys, affecting markets as a whole. Oil gets crazy. It gets sporadic. So it's definitely one to be careful around, especially if you're a newer trader. Oil, yeah, it's got a mind of its own. It's kind of, we always affectionately referred to oil as the problem child at my previous life. Okay, my previous role that I had with Ola Prime, between me and the other two coaches I worked with. So it's just it's a testy asset to trade. But anyway, yeah, we'll look at that here shortly. And then, yeah, as far as the inventories, though, it looks like we're projected to drop to 3 million from 16 million barrels. That's obviously a sign that would, if we have anything less than 3 million, guys, remember 3 million is priced in. So anything less than 3 million, if we see 1 million or 0 or minus 2 million, something like that, that's only going to drive the price of oil higher. But we'll see how that number turns out. Again, that's at 9:30 my time, so 10:30 New York City time. And then the U.S. dollar, it's a yellow folder event, but the beige book does come out today as well. It's just like a big giant. It's one of those big reports that you'll just fall asleep reading. It's all the jargon, all the economist numbers and everything to kind of, forecast the economy upcoming. So it's a yellow folder event, but I like to look at it and run it through run it through Grok just to have it summarize and kind of give me some specific numbers I'm looking for. But anyway, that's enough of the economic calendar. The only other things tomorrow, we do have our weekly unemployment claims here in the States. We are projected 3,000 higher claim total. So that would be a slight negative if that comes out, or anything obviously over 215,000. And then Friday, again, we got the regular non-farm payroll. Now, just a quick note on that. If you guys remember, the previous number was 130,000, but the number before that was 66,000. And they had projected it to be around that same number. So we basically doubled the non-farm payroll number, which is why we had such a good number the previous time. So now it looks like they're still projecting about the same thing they did last time, right in that 50, 60,000 range. So it's going to be interesting to see. I mean, that's a huge disparity, especially when we just had a big shock to the upside. So are we going to have a shock to the downside? Okay, that's the question to be had really for Friday. So that's that. And then, of course, average hourly earnings, which is a number that kind of helps to see what real wages are when you compare it to the CPI, the inflation report. Okay, that's this number here. Core retail sales coming out projected to be 0.1% higher. So that would obviously be a nice boost. Retail sales number on Friday, okay, the month over month, that's projected to go down. So that would be obviously a bearish number if that number came out like that. And then unemployment rate is expected to remain the same. We are at 4.3% here in the States. That's not too bad when you start comparing it to other countries out there. I know Canada's over 5%. I think the British pound is over 6 or something like that. But we're here at a modest 4.3%. So it's obviously, you don't want any unemployment. That's always a drag on the economies. But for here in the States, at least it's at a fairly low number relative to other countries out there, guys. So anyway, that's a big day coming up on Friday. That'll be definitely a time period around the 7:30 a.m. period, my time, to sit on our hands. Okay, for anybody in the Americas that trades the U.S. markets, it's a good time to sit on our hands at least 5 or 10 minutes before, 5 or 10 minutes after that number comes out, and just let the numbers kind of shuffle themselves as they may. Let the pieces fall as they may. Have the weak hands shake themselves out. Wait for volatility to come down. Wait for volatility and volume, rather. And then pick a trend and ride it after the fact. So that's Friday, guys. But that's your economic calendar. Good morning, Zambezi. Happy hump day. That's right. So we're getting there, guys. And yeah, and as far as top setups go, guys, just looking over here at the Edge Finder. As always, guys, if you are interested in simplifying your macro trading, meaning your fundamental analysis, your sentiment analysis, okay, the relationship between smart money and dumb money, okay, and then obviously looking at some simple technical numbers with trends, seasonality, etc., go to a1trading.com, guys. I don't get paid for sharing this. I just like to share it because it's helped my trading a ton. So www.a1trading.com. I'm putting that in the chat for you guys. That way you can go check it out on your own. Trader Nick, he's the developer of it. A friend of mine. I obviously do streams on his A1 Trading YouTube channel under Trader Nick as far as his handle. So we got 520 something thousand subscribers to that channel, guys. So if you're looking for a really good show after my show, that's obviously the place to be if you're looking for some morning analysis on the daily. So definitely go check that out. And then the last plug I'll do is he does have a discount code for Ola Prime, which is the company that I used to work with. Okay, olaprime.com. As far as if you're looking for a challenge account, maybe you don't have the capital to get started with, a decent size to make enough money, right? After you kind of get through the learning phase, the growing pains phase, olaprime.com, you can actually get a 35% off on their challenge accounts. I've got account with them. I've got a 100K two-step prime account. So if you guys are interested in that, you can definitely go to their channel. Once again, olaprime.com. I'll put that in the chat for you as well. So yeah, there you go, guys. There's a couple links to check out after the show is over or whenever. But as far as top setups from the Edge Finder, we do have several Aussie dollar pairs on here. So leading the way, we still do have the Aussie Swiss and the Aussie Yen. And these have actually strengthened, guys. When we looked at the Edge Finder yesterday, talking about potential bullish and bearish setups, Aussie Swiss, these numbers were a lot smaller over here. But we're now in very bullish territory for Aussie Swiss. Anything 9 or higher is very bullish. Anything 5 to 8 is just bullish. Okay. So that's, hey, if I find a technical setup, if I can time a trade, I'll do it. 9s or higher, that just basically means we got a hell of a lot more odds enhancers in our favor for that asset for a possible long. So just because it appears on this site does not tell us, hey, go out and buy that asset right now. Or, hey, the bearish ones, go out and sell that asset right now. That's not what it is. All it is designed for is to say, hey, it's like a weather forecast. Okay. It's like the weather forecast. You get the weather forecast for the next day. Okay, it's going to be nice and sunny. That tells me that I should be able to go out and wear shorts on the day. But sometimes the forecast can be wrong. That's why we have to time it. We have to wait for the day of to actually stick our hand up and make sure we're not getting rained on, right? That's charts. Okay, the charts is how we time our entries. So no one piece of analysis is perfect on its own, talking about the fundamentals, the sentiment, and the technicals. Okay, the trifecta trio, I call it, of analysis. It works like a charm though when you use all three in conjunction with each other. Okay, it's a three-legged stool. If you really remove one leg, the whole thing falls. So that's the way I look at it. But anyway, yeah, Aussie Swiss at the top, Aussie Yen at the top. Again, I'm in a euro pound long position, so it's still giving me a +5. I like to see that. Now, when I got into euro pound yesterday, it was actually giving me a +6. So it actually weakened by a point. So it's still on the bullish list. It's just not as strong as it was. So, but I like the technicals. In fact, we might as well just go take a peek at it first thing. But anyway, yeah, three Aussie pairs on the long side. But then we also have 2 Aussie pairs on the short side where they are the quote currency. Pound Aussie, Euro Aussie shorts. So yeah, that's that. Let's take a quick look at the strength of these currencies real quick. Let's go look at the macro scanner, and I want to, after it refreshes, sorry guys, after this refreshes, we will go and take a look at the individual strengths of the currencies. Macroeconomic surprise index, and look at the currencies by themselves. So this is why, guys, look at the very top. Which currency is the strongest right now? It's the Aussie dollar. So 66%. So that basically says that the Aussie dollar has exceeded expectations on 2/3 or 66% of its high impact economic calendar releases. Okay. Fundamental analysis being the strongest analysis group. That's the biggest piece to do if I want to get into a trade, if I want to buy the Aussie dollar. Okay. The other piece to that is there a weak currency that I can match it up with? Okay. Aussie Swiss, great option because the Swiss is missing expectations on just about everything. Swiss was actually at 0% yesterday. I'm curious to see what changed. So let's go look over here on our Swiss economic heat map. Okay, so all right, so yeah, we did have a bullish result for their CPI release. Okay, came out today, the CPI report, Consumer Price Index. Okay. Let's see. They had a forecast. They had forecast a minus 0.1%, but they actually had the number actually remained the same because the previous was 0.1%. So think about it. That's 0.2% higher than the forecast. So that's good for the currency, right? It's not as good for their pocketbooks in Switzerland. Okay, whenever they go to the gas pump, not to mention the war itself, but just the fundamentals, forgetting the war for a second, just the fundamentals by themselves. Okay, higher prices. So it's good for the currency. It's that weird report, just like the PPI, that what's good for the currency is typically negative for the stock market, their stock market. Okay, what's negative for their currency is typically good for the stock market. That's the way it is with CPI and PPI for all of our currencies that we trade. So they did have one good report, though, that came out. So that's good because, again, it was at zero yesterday. We're at straight up zero. So anyway, let's go back to the rest of the currencies real quick. We got Aussie leading the way. We've got the euro, which is the one I bought yesterday. Okay, it's sitting in second place. So 60%. It's exceeded expectations on 60% of its high impact releases. So that's economic outperformance. Okay, economic outperformance. I matched it against the British pound, which is down here second to last. Okay, this is economic underperformance. And I kind of personally use the rule of 40-60. So if it's under 40%, like you see the Turkish lira there is, if it's under 40%, that gives me a really good signal to be selling this asset. Match it up with a strong one, right? And the same thing over here. If it's 60 or higher, that gives me a pretty good reason to go and buy that currency. So I'd want to match it with the weak one. So that's exactly what I did, guys. Okay. It is giving me a +5 on the scoring, but the euro is both strong and the Swiss is weak. Or excuse me, the pound is weak. So that's exactly what I'm looking for. I'm looking at the disparity of the currencies, making sure that they're giving me a nice gap in the middle. So yeah, my main goal today, obviously, is to manage the euro pound trade. But if I can find an Aussie trade, if I can maybe match that up with the Swiss, that would probably be my favorite trade of the day, just because of the disparity and the strength of these currencies. Okay, Aussie Swiss, is it on the, look here, Aussie Swiss at the very top of the list. Okay, again, that's that very bullish asset, +10. There's no surprise. There's no surprise why that's at the top of the list. It's because Aussie is the strongest currency. The Swiss is the weakest. So let's do that. Let's look at my trade, euro pound, and then we'll also look at Aussie Swiss right behind it. Euro pound, let's go on over here. Okay, just starting from now on the right is always my daily chart. And the left is my 4 hour, 1 hour, 15, whatever I'm looking for. Zambezi, where did I get in? Let me double check over here at my price. Got that over here on my other chart. Let's see here. 0.8705. So basically what I was looking at, well, number one, before I get to that, the 8 EMA, okay, if we look over here, let me turn off my master pattern. The 8 EMA, which is the dark red. In fact, I need to darken these colors for you guys. They may be a little thin to see, right? Let's do this. I just realized that. Sometimes these lines are a little tougher to see. Okay, that's a lot thicker. That should help. I'll do the same thing over here. Now that I'm thinking about that, I know some of these lines can get kind of tough to see. So, okay, daily chart on the right. This is where everything starts. Hey, is my 8 exponential moving average above the 21 exponential moving average? In this case, the 8 is the dark red. So that's my 8. That's my fastest moving average. And then the light red is my 21. Okay, that's my slower moving average. So I want to always make sure I'm in line with this trend. If I'm buying long, okay, if my edge finder is giving me a bullish signal, I want to make sure my 8 is above my 21. It's a mechanical way to check trend. Now, you guys all know, no matter how long you've been a trader, okay, the first thing we learn is, stick with the trend, right? Well, how do we look for the trend? We do it by looking for higher highs and higher lows. So that's obviously the first step. But I also like to incorporate the mechanical way of doing that. So the mechanical way is saying, okay, my 8's above my 21. My faster is above my slower moving average. So that tells me we're looking pretty good. So we're good. We're good. Now, and then on the left is my smaller time frame, my execution time frame. And over here, I want to make sure, over here, I want to make sure I'm using two different numbers on my moving average. Okay, over here, I'm using the, hold on a second. Get this moved. So over here, I'm looking for the 50 EMA, which is my light blue line, and then my 200 EMA, which is my dark blue. So over here, I want to make sure I'm above. I want to make sure I'm above. My 50 is above my 200, I should say, guys. Sorry. So I got in at 8,700. I basically got in. Let me turn my drawings back on. Okay, right over here. Wait, hold on a second. No, it's over here. Never mind. So to start with, I was looking at, and at this point, I'll just move this over here. I was looking at my daily chart, first seeing my, you know what? I got too many lines on here. So this is my basing candle, guys. This is my demand zone. Okay, this indecision candle right here, followed by a very strong push out that left a gap. When price based and had a expanded range candle coming out, okay, that told me that there's an inefficiency in the market right here. Top of the zone to the bottom of the second candle. So we ignore the leg out candle because that's really where the inefficiency shows itself. But it shows itself when we have a gap left over. Okay, I call it an acceleration gap. Most people call it fair value gaps. Potato. Right. But anyway, that's the gap. So that's showing me the inefficiency in the market. Remember, the banks, hedge funds, big financial institutions, they like to tackle inefficiencies because there's typically unfilled orders just beyond that. In this case, our daily zone. Indecision candle, doji candle. Okay. So that's my daily. We go down to a 4 hour, and I actually noticed we had a couple different demand zones down here. So over here, okay, this is our daily, showing our gap here. Okay, but we're looking specifically at this candle right here. So let's zoom into that real quick. Okay, so this was the candle I was looking at because that's really where the volume started to grow, started to pick up. But our gap on this time frame would be like this. Okay. So we're looking at this candle as my demand zone because we have this gap right here on a 4 hour chart showing my inefficiency. 50 is above my 200, check. And then I actually went down to a 1 hour. Okay, this is where I refine it. And on a 1 hour, right in here where I got in that trade, my RSI went below 20. So that's heavily oversold. I use the extreme readings, okay? 70-30 are the typical readings that comes with the relative strength index. I use 80-20. It just gives me the more extreme readings. I like more extreme. Okay? If it's more extreme, that means we could potentially be seeing a pop. So yeah, that's where I got a trade. Now, bullish signal, everything's looking good. At this point, I just get in because I know I've got a 4 hour daily confluence, which you can see it's pierced. But remember, I've got my stop loss beyond the daily. So that's down here. It's further down. Okay, stop loss is actually at 675. Okay, so right here's my stop loss where I've got that line right here. Okay, I wanted to give it a pretty wide stop loss. Let's do this. Because the whole point of this trade is to go from the 8,700 where I got in and measure and make sure I'm getting a 2-to-1 reward risk. Okay, so obviously you do swing high to swing low, but I will incorporate that supply zone up there in red that you see to make sure that I've cautious before that. So that's 87 pips. Okay, what's 87 divided by 2? What, 42 and a half, 43 and a half? Guys, my math ain't the greatest. In fact, I actually on this one did measure to the take profit. So, hold on a second. Okay, 87.07. Take profit at 8,775. So that's 68 pips. That's more right. That's more like it. And then 68 divided by 2, which is about 33, 34, right? Yeah, right there. Okay, so that's my stop loss. So it's 72. 86.72. So that's my 2-to-1, guys. That's a 2-to-1 reward risk. I have to have at least a 2-to-1. 2-to-1 at least. If it's like a 1-to-1, meaning the supply zone overhead, that could cause problems. If it's closer than a 1.5-to-1, okay, 1-to-1 reward risk, I skip it. I don't like getting in a trade unless it's going to pay me something. Yeah. Wait. Yeah. Lucky you did. I nearly got stopped out. Stop loss is not that low. Yeah. I gave it a healthy stop loss because, the euro and the pound are both risk on assets. So what environment are we in right now overall? The overall general market. Pretty risk off, right? Okay, risk off markets, typically you see euro, British pound, Aussie dollar, New Zealand dollar. You typically see some bearishness out of those and then a flight to safe haven. Safe haven currencies are what? Typically it's the Swiss, the yen, and then the US dollar. And not to mention the risk off assets outside of currencies, obviously gold, silver. Okay. Typically the indices go down because they're risk on, obviously, but we're in a risk off environment. So typically you see the stock markets go down. And the same thing with Bitcoin, because Bitcoin is a risk on asset. Just call it what it is, right? So far, most all that is ringing true, except it doesn't seem to me like the Swiss franc and the yen are really abiding by the rules. Here's your Japanese currency index over here. Okay, this is Friday's close up here. Well, you would think we'd be getting a boost, but it looks to me like it's trying to decide if it wants to follow the geopolitics of the world or the intervention fears. And so far, it looks like intervention is still kind of winning out on the Japanese index. Okay, this is the currency index for Japan. So look at that. Your last couple of days, it's just been going down. Same thing with the Swiss franc. Okay, a safe haven currency. Friday close up here, but here's your Monday activity. Here's your Tuesday activity. It's going down. Going down. On that note, let's just take a look at the dollar matched up with those. I'm kind of curious. Yeah, dollar. Here's dollar yen over here. Obviously, we would expect to see it up. Yeah, dollar yen up. Dollar Swiss. This is a daily chart. Dollar Swiss. I mean, look at your dollar Swiss move. It's just nice straight up. Let's go look at the Dixie. Dixie is the strongest currency right now, guys. Okay, here's your Monday candle. There's your Tuesday candle. And there's so far your hump day candle. Now, there's clearly strength in here beyond the fact that it's a safe haven currency because we broke through this overhead supply. Okay, that's a daily supply zone. This was a strong daily supply zone. Look how far down it pushed price. It pushed price all the way down into this monthly demand. Okay. And there was a confluence where we had this daily demand inside of the monthly. So it pushed price all the way down to the demand. Now, from there, we got to bounce, obviously. We got to bounce on a new set of daily 4-hour demand zone confluences and off to the races. But we closed here on Friday. The biggest portion of that's been the last 2 days. So Dixie is, looking good. From a technical aspect, it's looking good, and it's a safe haven currency. It's like the main one. So that is the Dixie. What about the VIX? Remember, guys, we got pretty strong spike in the VIX. Okay, there's your Monday candle, spiked all the way up to pretty close to 30. Oh, no, 30 on Tuesday. Monday, we got the spike up to 25, but Tuesday, we got up to 28. Look at that. I actually just played a game with myself to project on Sunday, guys. I was projecting how far the VIX would go. And I was projecting it to go to 30 because that's where these kind of double tops are over here. And you can see the candle I drew on early Monday morning. Well, actually, not even Monday. I drew it on, Sunday. I'm sorry. Sunday where the market's open. But then, I basically expected to push up before, doing some retracement. And I got pretty close. Did I get pretty close? That was a pretty good guess. I'm by no means Nostradamus, but I just thought that was kind of fun to see what kind of a push we could get. That's pretty close. I give myself credit for that. There's your VIX. Anyway, gold, silver. Okay, you would think that these would have some boosts upward because gold and silver, they like thriving on chaos. Thedo. Looking at dollar Swiss longs. I'm currently waiting on a 4-hour pullback. Yeah. Let's take a look at that. We'll take a look at that here in just 1 second. With gold, though, okay, we had a gap up on the market open on Monday. Well, Sunday here in the States, but Monday overseas, before having a big retracement down, a big sell-off. Now, somewhere in here, guys, you had some good U.S. dollar data that came out. Let's go back to our calendar real quick. Let's go this week, and let's just isolate to the high-impact events. Okay, we had the manufacturing PMI data come out, positive for the dollar on Monday. Look at that. We went from a 51.7 forecast to a 52.4. That's a pretty nice spike. Good for the dollar, and typically what's good for the dollar has a little bit of an inverse relationship with the metals, with gold, silver, right? So that's part of the reason we had a pullback. Obviously, with the news, obviously, the killing of Khamenei, okay, Ali Khamenei over in Iran, okay, that brought about some good news. As far as taking terror off the streets, guys. I mean, let's just call it what it is, right? Profit taking as well. You had a lot of buyers in that gap up. That looks to me like a lot of them probably got squeezed out as well to the downside. You probably had some profit taking and then a squeeze down. Now, what did we squeeze into? We squeezed right into a demand. I drew this demand zone up, and I talked about it on the Trader Nick stream yesterday, because I was really excited, really interested in possibly going for a buy position here, but it was not on the Edge Finder. Okay, it was giving us a +4, so I just needed another point of strength for gold, and we're still at the same score, guys, +4. Remember, bullish signal is 5 or higher, not 4 or higher. So I ignored it, but just even though I ignored it doesn't mean that it might work out anyway. Okay, there we go. Got a nice wick in, and it looks like we're trying to move the upside. So yeah, that's gold for you. It's a no-go for me. It's a no trade, but let's look at dollar Swiss for you there, Thedo. See what we got going on over here. Obviously, it's a neutral score as well. If we look at dollar Swiss over here in my neutral category, it is given a neutral +2. So it's got a slight point for technicals to the upside, but sentiment, okay, the relationship between smart money and dumb money, that's not helping us at all, giving us a -3. So we're not able to necessarily use retail sentiment as a contrarian signal. Same thing with the COT report, put to call ratio, AAI investor sentiment survey. Okay, when you look at all that stuff, it's giving us a -3 score. So that's more of a bearish score. But the eco, okay, the fundamentals, that is giving us a +4. So that is a nice bullish signal. So you can see, though, it's just too mixed of a signal, right? It's not very strong on the technical side. It's obviously weak on the sentiment, but it's strong on the eco. So, which one are we going? Which way are we going? Are these the types of scores that might just give us up and down wicks, sideways trend, perhaps? I don't know. But anyway, let's go look at the technicals, though. Dollar Swiss. Okay, if I'm looking at my daily chart over here, what do we got? We've got lower lows and lower highs. So if you're buying in this area, I mean, it's, just understand you're going against the trend, obviously. Okay, a strong downtrend because your 8 is also below the 21 EMA. So this is just screaming short. Remember, the trend is your friend until the bend at the end. And if we look over here too, oh my gosh, I'm looking at the wrong damn chart. Wrong chart. Forget everything I just said. Okay, here we go. Because this picture looks a little better. I haven't looked at dollar Swiss for a while because I haven't had it on the list. It's just been neutral. But okay, so this picture does paint a better picture for you. Yes, Zambezi, I am. And if you go to that website that I put in the link, or I put in the chat earlier, the a1trading.com, at the very top right, you'll see the schedule. Oops, I don't know what I did. Okay, here's our a1trading.com. You can sign up for their free Telegram, by the way, guys. They do put some articles out each day for the topic du jour. What's the hot news item of the day that's moving markets, the markets that we trade? That was that pop-up, but I just clicked off of it. But yeah, up here at top right, A1 live stream. You can just click that. And then actually, I forgot, guys. No, today I may not be on the stream. I asked them, I told them you at the time I was supposed to be slotted, which was this 9 a.m. Eastern time slot. But yeah, I got with the producer yesterday and said, hey, I got this coming up. Can I swap? So I'm not sure if they swapped me out with anybody or not. I need to actually see if they replied to my message, which they have not at the moment. So anyway, yeah, I'm not sure, to be honest with you. But nevertheless, today's just the outcast of the day. From now on, you guys can look on here. There you go. There's Thursday. There's Friday. It'll show all of our slots down there. You can take a look at all of us over here, all of us contributors, okay? See my ugly mug over here, kind of what we specialize in, things of that nature. Our socials, guys, I've got an Instagram, a X, and obviously my YouTube account links up here. You guys can go to at any time if you want to check. I do some shorts every day while I'm on that topic. I do shorts every day covering the topic du jour. Okay, I do that over here on my YouTube page. So yeah, I just simply go to @TradeLikeATiger on YouTube. Now the other thing is I've got my Linktree app here, or my Linktree website. So it links to all 6 of my social sites. So maybe you like Instagram the best. Maybe you like TikTok the best, or Reddit, or Facebook, or YouTube, or X. Okay, I've got the same handle for all 6 of them at TradeLikeATiger. That's this link right here. You guys can click. So anyway, back to the charts. I do have about 22 minutes left. What did I do with my chart? Okay, there we go. What else we got? Technical side. Yeah, Thedo. So I actually created a technical. I guess I could share this. Let's do this. I have another YouTube channel that I guess, yeah. So, okay. So here we go, guys. I've got another YouTube channel that I created before I started working with Ola Prime, and that's this one here, Tiger Trading Project. If you guys go here at Tiger Trading Project, you can actually click on playlists, and then right here on Trading Foundation. And then here you go. This is where I did a separate video for fundamental analysis, sentiment analysis, and then technicals. There you go, right there. There's your technical video. Now, I'll be honest with you, I might need to update the video because trading is something where things change, right? Sometimes we edit this in, edit this out, meaning like odds enhancers or indicators, things of that nature. So yeah, this is most of my strategy, but there's a few other pieces that I need to add to it. So Yeah, check that out though. That'll be a good, these will be good videos, guys. And remember, my idea, the most important order for me is in the order that you see there. So to me, fundamental analysis, remember, that is the most important of the three. Okay. The fundamentals are the reason we get into a trade. The sentiment analysis, which is the relationship between smart and dumb money, that's the confirmation as to why we should get into the trade. And then the technical analysis, which is the least important, that just helps us time the entry that the fundamental and the sentiment analysis told us to go and buy or sell. So that's just the reality of it. So many people get hung up on technicals, but I would argue that these top two videos are more important than the technicals. Now, you won't hear anybody else on YouTube, almost nobody else say that, because everybody thinks the technical analysis, the charts, are the sexy part. It is. Pretty colors, pretty patterns. Okay. But that's just nothing more than a timing mechanism. That's all a chart should be for. Now, some people make a lot of money on technical analysis by itself. But if you want to stick around the game long enough, then just a bright spot or a rising star hot shot that turns around and blows their account in a few years, it's a good idea to have a well-rounded approach. So, but again, it all starts with fundamentals. It really does. Again, that's the reason that the top setups page has so many fundamental specific boxes up here. See, you got economic growth and consumer strength, you got inflation, you got jobs market. That's all that from here to the right, that's all fundamental analysis. And it's taken up well over half of the total boxes you see up here, guys. Because remember, you got sentiment analysis, that's giving you 2 boxes. And then the technicals, the things that people rave about the most, that's only 2 boxes. So I think that this is a perfect visual of how, why we say in A1 trading that fundamental analysis is the most important part. So we have to understand the relationship between the currencies for the GDP, for the retail sales, for the non-farm, for the items that obviously are for the other 7 major currencies besides the dollar as well. But yeah, unemployment rates, jobs numbers. That's what they're talking about on CNBC. That's what they're talking about on Bloomberg Markets, on any other, legacy type financial media outlet. They're talking about all these items over here. Okay, so just keep that in mind. But yeah, I think that'll be a good start for you. And then I just made a video down here that talks about the Wyckoff theory. Okay, the as far as accumulation and distribution of inventory, which is like 100 years old. Okay. I mean, that's been around forever. So I just tried to simplify it and utilize something called the master pattern. Okay. The master pattern is an indicator that really it gives you an actionable way to look at Wyckoff theory, to look at accumulation distribution. Okay. And then obviously putting everything together. So this would be a good afternoon for you or evening. Check those out. Let me know your thoughts on that. Again, I think that I should probably do some updated videos, but probably 90% of this would be in my, most of this would be in. I would just probably be adding about 10% into my new videos. So yeah, there you go. But yeah, whenever I started with Ola Prime, I just kind of kicked this site off to the side because I was busy with, I was doing weekly watch list videos over here too. Did a couple shorts, but now I do all that stuff on my Trade Like a Tiger account. You guys see it in front of you. So, but anyway, yeah, that's enough of that. I get off on tangents, guys. You know how I am. Okay. So, but dollar Swiss, because you wanted to know about dollar Swiss. So the cool thing with dollar Swiss, and I do think you said buys, correct? Let me go double check over here. Very given, dollar Swiss. Okay, we got a pound cat on here as well. We can take a look at that. Longs. Okay, yeah, I see it now. So we have our 8 that crossed our 21 to the upside. So that's a good sign for the buy, the potential buy. Okay. Again, we're looking at technicals only because it's not giving us a bullish signal on the fundamentals sentiment. But over here, what we have is, okay, again, from the technical aspect, we're looking good. 8 above 21. And over here, we've got the 50 on a 1 hour chart. We've got the 50 above the 200. What about the 4 hour? Yeah, we're not really getting a signal on the 4 hour. But if I'm just looking at structure, if I'm just looking at supply and demand zones, we'd be looking at this as a swing low and swing high. This swing low, this swing high down up here. If we're just isolating the curve analysis, which is another one I talk about in the technical analysis video, okay, when I break it down into thirds, keep in mind that right now we are in the middle. We're diddling in the middle. We're in the red zone. Okay, the discount zone's all the way down here. So if I'm looking at demand zones, I'd be looking right here at this candle as our demand zone. And that's a long ways away from price right now. Now, that's the higher time frame. But if we drop into a lower time frame, we've got a basing activity right here where we're at as we speak. 1, 2, 3 basing candles. Okay, that's not too bad. We would just have to drop the time frames on all this. Do I have a 1 hour demand zone inside of this 4 hour demand zone? And I would argue no, because all these candles are kind of overlapping the candles to the right. Every second candle. If you look at all these candles and look 2 candles to the right, it looks to me like they're all pretty well touching. In other words, it's not leaving me, it's not leaving me my inefficiency. That might qualify as a tiny gap, but that's not enough of a gap to get me out of bed. I got to be honest. See how small that gap is? And that's after I zoomed in a little bit. There's just not enough of an efficiency here on a 1 hour chart, because I always use the rule of 4. So if I'm looking at that first zone on a 4 hour chart, divide 4 by 4, that gives me 1, right? That gives me a 1 hour chart to look at next to find my confluence. So the number obviously doesn't work quite that way when you're looking at a daily 4 hour, 4, 8, 12, 16, 20, 24. It's 6, right? That'd be the rule of 6. 24 divided by 6 would be a 4 hour chart. But for all the other charts, all the other time frames on the, anything under a 4 hour chart or under a 12 hour chart, just take that number divided by 4 to get your, the next step down chart as far as multiple time frame analysis is concerned, if that makes sense. So 4 hour to a 1 hour, 1 hour to a 15-minute, 2 hour chart to a 30-minute chart, right? 2 divided by 4. It would be 30 minutes. So that's the idea that you kind of want to follow for multi-time frame analysis. But anyway, yeah, on this 1 hour chart, that's a gap. It's just not enough to get me out of bed. It's not very strong. So, and not only that, the RSI, I'm looking for anyway, oversold readings, over an extreme oversold reading of a 20 or lower, and we're currently up there at 44. That's on a 4 hour chart. Now, and the same thing on a 1 hour chart. See, we are in this demand zone area, but our readings just aren't there. We don't really have that strong of an oversold rating. We're at 36 right now. The red lines are my 20 and my 80. So that's 20 down here, and that's 80 up here, right? So the odds enhancers are just not helping me. The only thing that's saying, yeah, this might be a buy is just the fact that we've hit the demand zone. That's it. Okay. The moving averages are looking good again on the 1 hour chart, but not the 4 hour. It's looking good on the daily. So yeah, I personally would wait for a retracement all the way down here. Now it may not get down there, but if Edge Finder at some point gives us a bullish signal, then yeah, I could see myself buying down here, but that's just too far away right now. I'm not interested in the demand zone we're currently in. And that's about the best I got for you. Okay. Unless we start getting some stuff, some Edge Finder, signals, I'm just going to ignore it. CAD yen. Okay. Neutral signal over here. Let's Go look at CAD yen. And then I think I saw another one, pound CAD, somebody posted. Yeah, let's look at that. So CAD yen, 8 is over 20. That's good. Now we are in a premium zone because we are at the top of the curve. Okay, remember, curve analysis, swing high to swing low. Okay, we are in the premium zone. We're in the top of this curve analysis. So this is, if anything, where I'd prefer to be selling, just looking at the higher time frames, right? But looking over here, 50 is over 200. I like that. It's on that on the 4-hour and the 1-hour chart. So I like that. RSI, am I getting an oversold reading? No. Not getting any oversold readings, which is understandable because we're just straight parabolic move. At some point, these moves have, they exhaust themselves and they have to sell off. People start taking profits and price retraces down to a discount zone to buy again. So to me, it's just too expensive on CAD yen. Okay. And I didn't even really need to dig into too much analysis, but that's really the first thing right there. It all starts on a daily. Hey, am I in any overhead supply zones? And if so, then I usually just skip it. Yeah, because I'm basically looking on a 4-hour chart. That'd be my supply zone right here, which is what we're chewing through now. So yeah, I would need a retracement down to this lower area. I did draw up another zone here. It looks like on a 1-hour chart. This was actually on CAD yen and all the yen pairs. I was actually keeping my eye when price was down in this area. I was keeping my eye right here, because that right there was a very strong demand zone on a 1-hour chart. That was nice. Big giant gap. It broke structures. Okay. But at this point, price has run off too far. So probably not too excited about it. See, if we would have gotten the retracement from this area down, that would have been an idea for a trade. But now that we've went this far up, think about it. If we come all the way down now to that zone, well, what are we in at that point? Now we're in a downtrend. Now we're fighting the trend if we're trying to buy. So, yeah, that's kind of the way I see that. Maybe you could look at some of this area over here as a demand zone. I mean, we did chew through that 4-hour supply zone. So that does say that we've got some strength somewhere. So I would basically look at this most recent swing low to the current swing high. And I would personally look at a curve analysis on this time frame. Swing, oops, hold on a second. Swing low, swing high. And then this is our new curve analysis on a smaller time frame. Now remember, the smaller the time frame we go, the noisier it gets, right? But if we're looking at it on this time frame, you've got some demand zones down here. Okay, there's a demand zone here. There is another demand zone down here. Well, which one of these do I go for? Now that's what you call a zone on top of a zone. So that's just an extra confluence of strength. So if I see a zone on top of a zone like that, then I would just combine them and make them one big zone. And potentially, if you were to buy once price comes down here, assuming RSI is oversold, assuming 50 is above 200, then yeah, just put your stop loss below all that. Okay. And just take a simple 2-to-1 to the top of the top. Now, in the process of price coming down, though, you could very well create a strong supply zone that you got to watch out for. Okay. I don't see anything yet because these candles are overlapping all these candles to the left. So I don't yet see a supply zone forming. Perhaps if we get a strong, expanded range candle down, perhaps this could turn into a supply zone, but we don't know that yet because it's got to do its thing. So anyway, but yeah, if nothing else, from that point, if you get into the trade down here after a 1-hour bullish candle showing that momentum's trying to shift, then measure from your entry to the top, 137 pips, it looks like. We'll just call it 140, round it up. What's 140 divided by 2? If I'm going for a 2-to-1 reward risk, that's 70 pips. That might be quite the that's a very wide range, but that would put you basically down here. So you could even turn that into a 6-to-1, or I'm sorry, a 4-to-1. Okay, if you cut that risk in half, or just took it down to a 50. Okay, that would obviously give you a little bit better reward risk. The important thing is make sure your stop loss is below the swing low, right? So, you know, somewhere in this area, I think that'd give you a good trade. So you're buying off these unfilled orders. You're looking to take profit at the top, but your line in the sand would be below not only those demand zones, but also below this wick. Okay, there's probably going to be there's definitely going to be some stop losses below here. Okay, right here. There's going to be some sell orders because these traders in here did push price up. We did have some volume pickup, some volume spread analysis activity. So there's stop losses down here, just like there's stop losses below this swing low. Okay, potential stop losses. So anyway, that's CAD yen. I'll do one more, guys, because I do got to get up out of here. Like I said, at the end of the at 7:30 my time. Let me see. Let me double check my chat. All right, Sam Beasley, we'll see you over there. Yeah, CAD yen, Theta. We like that vibe. Ask about pound CAD. Is that a good pair given pound is bearish and CAD might go up because of oil? Yeah, sounds like it to me. Let's go look. So pound CAD shorts, I would say. So let's go look at the edge finder. Pound CAD. Okay, it is giving us a neutral reading as of now. Let's go look at it on the neutral scale. Pound CAD. So it's a neutral score of -1. So it's got a -1 point on the technicals, a -3 on the sentiment analysis, but it's got a +3 on the fundamentals over here. So that is way too mixed of a signal for me, guys. You've got one that's basically neutral. You got a bearish signal and you got a bullish signal all wrapped up in one. So when we get those neutral scores, it's just not my favorite trades to get into, but we'll have a look at it anyway on a technical aspect for you. Pound CAD. And then I'll end it on this, guys, okay? Because I do got to get up out of here. So if I look at the daily, it's given a nice bearish price action. We got 8 below the 21 on the EMA on the daily, so that's bearish. But what has happened? What have we bounced into? A daily demand zone. Okay, this is again, we're back to our daily chart. We're looking right here at this this candle, this doji candle, but bearish doji. Okay, from here we had a gap up and a push up. So this is a daily consolidation, potential unfilled orders in there, and that's literally where we dropped into. So do I want to sell something that's bouncing into a support, into a demand zone? Probably not. Now that we've bounced into that higher time frame zone, I would expect to have price bounce up to the next higher time frame supply zone. Well, that would be the swing low up here. And you can see on a smaller time frame, I do believe I got a 1 hour chart in here. Down here, we got a 1 hour as well. So I would expect price to be bouncing up. Okay, if I were betting, if I were putting my own money on this, I would expect price to move up at least to here. That would be my bet. Okay. But I wouldn't put money on the buying because we're in a strong downtrend on a technical. So hopefully that helps out. But you guys, yeah, I do got to get up out of here. I'll be back my normal time tomorrow, 6:30 a.m. to tomorrow should be a normal day. So should be 6:30 to 8. I have already, guys, put on my live streams for the rest of the week. So if you guys would go over here and hit the notification bell. I know, sometimes we get busy. We don't see things we want to see. So it's good to have these notification bells. But there you go. I've already gotten Thursdays and Fridays put up. I'm going to start doing this on Sundays, by the way. I'm just going to start mapping out the 5 weekdays of lives. That way people can start subscribing to them ahead of time. And also to help grow my channel. So with that, guys, I'm going to get up out of here. Send me some good vibes. We'll see if I can get a job. Peace, guys. Talk to you tomorrow.